What is going on today, YouTube? Today, I want to tell you guys about the most used studies that day traders, swing traders, anyone uses. If you're new to my channel, I make investing videos teaching you guys stuff I wish I knew when I first started. So if you like this video, leave a like on it, leave a comment below if you got any questions, and subscribe to my channel if you like the content that I'm about to share. So today, we're going to go over the most used indicators that traders use. This is traders, investors, technical analysis mostly, because I am a long-term and short-term investor, trader, whatever you want to call it. I have long-term investments and I have short-term trades. So the first one we're going to go over today is the EMA. This EMA line, it's this little teal turquoise type of whatever color it is line that you can see right here. Its cursor's on right now. It depends what kind of length you have this line on, but you can see up here I have it on 15. I like 15 for looking at my 6-month day chart, and I like it looking for my 180-day 4-hour chart. You can change that. You can go up here, studies. You can do quick studies. You can do add study, edit studies. But just briefly show you, I have another video on this, how to set up studies. You can go check that out. But here's DEMA, DEMA line, simple moving average, VWAP, RSI, momentum, and MACD. These are my favorite studies to look at, and so is law traders. Law traders will just use the EMA, simple moving average, RSI, momentum SMA, and the MACD. I'm going to explain these a little bit. But just to show you real quick, if you change the length, you can go here to settings. See how this length is set to 15? We'll do it drastic. Pay attention to this line. Pay attention to this teal line in the background. We'll change this to 180. Just to show you a drastic. Hit apply. Watch this line. And see, it really flattens it out. When you have the length larger, it flattens out the line. It doesn't go with the shifts as much. So for me, in the charts I like to look at, I like using 15. Because 15, it more replicates what I'm looking for. And this, the length, it's all preference. You can change it however you would like to and fit it to your needs, the chart that you are looking at. Ideally, when you set up these lengths, you want this to more replicate your more to day or whatever chart you're looking at fluctuations. So see, when I change this back, that teal line gets a lot closer to what the chart I'm looking at. It goes above the line, it goes below the line. It goes above, rides above, goes below. Rides above, rides below. That's kind of what I want to see when I am looking at these charts. And the simple moving average, it'll look a lot better when I go to a different chart. But for now, all this EMA line is, it tries to show you the trend of the stock. So when you have it tighter to where this stock is trending, it tries to follow the stock. So if it's pointing up, you're on an uptrend. If it's starting to level out, you're starting to go on a downtrend. If it's starting to level out, uptrend. Right here, it's pointing down. Stock's on a downtrend, it's losing value. Look, starts to go up again. It's on an uptrend. So traders will use this. It kind of tells them the way the stock is going. ETF, stock, whatever you're trading. It'll work for all of these, and it will try to tell you the momentum. If it's on an uptrend, downtrend, what so forth. So now we're going to go to simple moving average. Simple moving average, it's almost, it's not the same thing. It's what it sounds like. It's a moving average. So to better replicate this line, I have it on here because it just stays on here all the time. I'm not going to turn it on and off. But if I go to 180-day, 4-hour, you can really see this looks for a more long-term view. You can see it almost bounces off this line. Just for it's set at 180 when I go into my 180-day 4-hour chart. It kind of bounces off this line. See, it goes up, it comes back, pulls back to the line, goes up, pulls back to the line, up, pulls back, bounces off, goes up. And yes, there's no doubt these brokers out there like TD Ameritrade, this Thinkorswim platform, they make these to make you think you know what the stock's trending, but you really, no one really knows. It's all this trading is, it's risk reward. Now, if you're going in for an investment long term, it's more valuing a company, and I have videos on that. You can check them out. But if you're doing trading, short-term stuff, it's more risk-reward. You want to figure out, okay, this stock's down here. It's been trending this high for a while. There's more than likely it's going to go up. I'm not going to buy when it's at the highest point because more than likely it's going to go down eventually. So traders will wait for big drops like this. Wait to see an uptrend. You can see on that closer, the EMA line. They wait to see an uptrend and then they'll buy in. And they're only looking to make, up here. That's 7% gain in couple days, 5 days. So that's what traders are looking for, and that's how they use these two so far that I showed you to help them figure out what the stock's doing. As you can see, like the simple moving average, it's trending down, then all of a sudden, when it gets closer to a line, it starts leveling out. But Facebook fell again today because there's a hacker out there that says he's going to shut down Mark Zuckerberg's Facebook account and delete his entire profile. So news came out and they're saying there's a big breach in the company. A lot of people's data is at risk again, so stock fell. Usually what happens, it fell 2.5%. You can see up here. But when news comes out like that, that's what's going to happen. All right, so now we're going to go to RSI. RSI indicators down here. You can alt anywhere in Thinkorswim. If you want to turn these on or off, go into studies, go into your edit studies, and you can clear them. You can add more. You can take them off. See, if I click here, I can actually click this X, delete it. You can move them up and down. See, it says lower, 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 price, volume. There's a lot of different studies you can put on here. There's a lot of different things. These are just my favorite and the most common. So we'll go down to RSI. We're going to look at this to make this a little bigger for everyone to see. 6 month, 1 day. These will all change based on the time frame you're looking at. See, here, RSI indicator, all it is relative strength index. This shows you when the study thinks the stock is overbought or when the stock is oversold. When it turns red up here, it's overbought. Turns blue, teal, whatever you want to call it, it's oversold. As you can see, when it's at its highest levels, it's overbought. It's more towards the higher level. It goes between a range of 30 and 70. 30 is being oversold, below 30, and above 70 is overbought. It'll bounce in between these ranges. When it's up here, it's overbought. Down here, oversold. This is what a trader will look for when he's looking to make a position. If he thinks it's a good time to buy, he looks at it and the RSI indicator is all of a sudden saying it's like at 69, 60, 71, somewhere around there. It's probably not the best time to buy because, I mean, if you look at it, all the times when it's up towards those levels, it's the highest the stock ever was. And all the times when it's down, it's off big drop-offs, big drop-offs, big drop-offs. Still saying the stock's oversold. Now you can see how it changes if we go to 180-day 4-hour. A lot more overbought, down. See, when a stock gets comfortable at these levels and hangs up there for a while, it'll start to be normal. And that's why this trend's in the below 30 to 70, like right in between, because that's a normal level for it now. Keep on going, it still keeps on going up. That's a new high level for it, so it's going to say it's overbought. Then when it dips down, flattens out, so to go in the middle or towards oversold. And they fluctuate all the time. And it's never a sure tell sign that the stock will go down or the stock will go up. It's just an indicator. All these are just indicators. If there's anyone out there that's telling you that you can set up one study and the study's going to tell you when you should buy and when you should sell, you better start running the other direction right then because they have no idea what they're talking about. Put it this way, if there was a study out there that told you exactly when to buy and exactly when to sell, one, that person would be a billionaire. He'd be the richest man in the world. And two, think about it. Someone by now, with enough computer geniuses out there, would have made a software to automatically buy and sell when an indicator was wherever it was. If the indicator told you to buy, they'd buy it. Indicator told you to sell, they'd sell. And someone would make software like that. It's not. None of these indicators tell you for sure to buy or sell. They are just references. Now we'll go into this momentum SMA. Again, to explain it, we'll go into 6 month day just to make it a little clearer. So your SMA, simple moving average, it's all off of this red line. You have this red line and this blue line. So when this red line's going up, it's showing the stock is on an uptrend. I know my face is kind of in the way, but I want to leave it there to show you the rest of the chart. So it's going up. It's on an uptrend. The stock's trending up. And then look, right when this starts flattening, going down, when it crosses that red line, that blue line now crosses the red line. As soon as that crosses, look, this stock is on a downtrend now. And technically, it's on a downtrend until that blue line crosses the red line again. It might cross in here. It's hard to see, but you can see it is on an uptrend the whole way up here. But technically, that red line's on a downtrend. because it crossed here. That's the last. It was going up, crossed here, so now it has to be going down. So technically, that's on a downtrend. That's what I mean by none of these indicators are 100% all the time. Yes, it's showing you a downtrend, but the stock's still going up. So there's one outlier right there. And we looked at one stock. So, but yeah, when this crosses, it tries to show you the shift in momentum. That's why it's called a momentum. Simple moving average momentum. Shows you the momentum's going down, it crosses over, momentum's going up. You can even go to 180-day 4-hour, and you can see it changes a lot more. It's going down, it's going up, it's going down, it's going up, it's going down, shifts, goes up, and you can see from right here, this line keeps up with right here. It's going up this entire time, and then as soon as it starts going down again, flattening out, going down, that momentum SMA starts pointing down. Alright, the last indicator that I'm going to show you in this video that a lot of traders use is called the MACD. This kind of shows you the same thing as the momentum SMA, but it gives you these little fancy red bars, green bars. What these try to say is right here is at a huge drop, and it's still at a selling point. It's still at a selling point right here. But when this red gets closer and closer to the break-even line, it starts to turn green. And that's trying to tell you, okay, it's a buy point. It's starting to buy now. So you should buy it now, and then you can see it keeps on riding until, you can see my line up here, keeps on riding until it starts leveling out. Then it tries to tell you it's to a sell point. And that's the whole point. I mean, it's the easiest to tell right here. We're going to zoom into that 6-month day chart again. So right here, sell point. It's getting closer to the break-even mark. And this one really, with the length of this line that I have set up, it doesn't really show you on 6 months, 1 day. I don't really use the MACD that often. If I'm looking at a 180-day 4-hour chart, I might look at it. It gives you a better interpretation there than it does on the 6-month day chart, just because there's not enough fluctuation for that study to work at the length it's set at. You can change the length, see how these numbers are 12, 26, 9, play around with it, and you can get it working for whatever time frame that you want to use. So to sum up the video, most common studies, indicators that traders use is the EMA line, which is this one that closely follows the stock, its price fluctuations. Simple moving average to tell you if the stock's on an uptrend, downtrend. The RSI tell you if the stock is oversold or overbought. The momentum SMA to show you where the stock is trending right now, if it's on going up, going down, and the MACD to tell you when it's a good buy, good sell. And remember, none of these are perfect. You can use them all as just indicators, as hints to help you figure out if this stock's trending up, trending down, overbought, oversold. Do never, ever use them as a sure tell sign to buy or sell a stock. So if you liked the video, taught you something, leave a like on the video. It really helps me out. Tells me that I'm making videos that are helping you guys out. Leave a comment below if you got any questions. And if you like this kind of stuff, subscribe to my channel. And I will see you guys in the next video.